So what's up, good people? How you doing today? Today is a good day. It's green in the markets. I want to show you a clip that I think everybody should listen to. Jeremy Siegel, who is a professor, quite brilliant man. He says something that makes a lot of sense. I'm going to play that video and we're going to discuss it. But like the great poet Ice Cube said, today was a good day. And so we'll take it, But before we do that, listen, if you are just new to the page, go ahead and hit the like and then the subscribe and then that notification bell in your lower right hand corner, right? But if you're already subscribed and you hit that subscribe button again, you are unsubscribing. So make sure it's checked, it's darkened, okay? Ever since I've been saying that, my subscribership has been going up. Thank you guys so much. Welcome to the family. Those of you that are new, those of you that came from other pages, hey, we're all family here and we're all invested in everybody making money, okay? Regardless of a race, age, or gender, we want the family to eat. Let's talk about what's going on in the market right now. I have a chart up here. Let's go right to it. And as we could see here, the S&P. So what I wanted to show you in this chart is the S&P 500, right? So there is a lot of talk that said, because we had that 13-point move last Thursday, did we actually bottom out? Did we bottom out with that move? Was that the bottom? Because we had high CPI numbers, right? The market went down, but then it reversed and it was a 1,300 point swing. So there was a lot that you could read into that, okay? And so we got to trust the data. We got to trust what the market is telling us and showing us. Now, I'm going to just skip and go right to this clip that I want to play from Jeremy Siegel. I believe I'm saying his name correctly. I listen to him often because he's often right. Remember that. He's often right. I want you guys to listen to this in its entirety. It's only a few minutes, and then we'll talk about it, okay? Listen.
Lagged that are way understated in 2021, way overstating what we have right now. Since March 2020, when the pandemic began, until this summer, the Case-Shiller housing index was up 40%. The Zillow and apartment list rental index was up 30%. Guess what the CPI shelter index was up? Only 11, because of the lagged way that they constructed. So this is Jason Furman, great economist. I think he's one of the CNBC contributors, and he's been on your show quite a bit. He decided last week, he said, well, what happens if we put a current rental, like Zillow rental, into the CPI index? And he tweeted this late last week, and the results were really shocking. What you got was that core inflation on a 3-month annualized basis, and this is a measure that Jay Powell has looked at, reached 16% in 2021. About double what the official number was. And by the way, it was in the first half of 2021 when the Fed said there's no inflation problem at all. Now, what's the bottom line? It way understated the inflation we had. We've had much more inflation. And now, when house prices are going down, when rental rates are going down, and I don't mean they aren't jumping from where they were a year ago, but not as high as they were now. If you take a look at these indices, we should have had a negative number there instead of a positive. And what that means, the way they constructed is we're going to get 0.7, 0.6 plus 0.8 for month after month after month. In 40% of the core, it's going to look horrible. Oh, my God, the Fed isn't succeeding. We have to keep on hiking rate, when it is giving a totally distorted view of the actual on-the-ground rate of inflation. I think that the Fed has to rethink about using current data, and they will see that their policy has worked. and inflation is down, and those core statistics are not giving an accurate representation.
So you guys see that, and I agree with him. So what he's saying is it's just behind. So what the Fed has been doing by raising the interest rates, right? Meaning what he's done with these aggressive interest rate hikes have worked, but he's just not giving it time, because when we do these rate hikes, sometimes it takes 6 to 12 months for it to trickle down to the actual economy, right? Job loss and all of that. And so what Jeremy Siegel is saying, and I agree with him, is that if the Fed keeps doing too much, then it's making things worse months down the road. Like he's just pulling that slingshot or that rubber band too tight. And so actually that the data is showing that inflation is going up. It actually is, but that data, remember, the data could be 3 to 6 months behind. So if you guys have been watching with me here, you guys know that I believed that inflation would have kind of tapered off, I said, around the second week of October. And I believe that it has. But the data is so far behind what Mr. Siegel is saying that we're not getting a proper reading. And if the Fed keeps up with this, he's going to force us into a recession, right? And so the market is speaking, though, and we have to listen to what the market is saying, good people. That's what I wanted to show you today, because I just thought that was so important to be discussing today. And so let's look at the indices like he was talking about. All right, at the point of showing you guys this, right? We don't know where the close is. I'm doing this just before the close, an hour and 15 minutes before the close. But as we can see, the Dow is back over 30, which is good. The S&P, as you can see, look at this, almost 3%. The Nasdaq is up 3.5%. I mean, that's pretty good. The Dow is almost 600 points. Let's see where it closes, okay? And I just wanted to let you guys see one of the things that, one of the plays that I was in. Let me make sure I'm not exposing. So I just wanted to show you guys this. For those of you that were following some of my plays, one of the plays I wanted to show you is, let's just go right to it. Let's see here. Nope, it's not showing. All right, it won't show. All right, sorry about that, good people. I'm gonna just keep the camera rolling. So if you go to, let me pull it up here. Let's pull it up here. All right, we're gonna go and add grow, ticker symbol compared to ticker symbol GORO, right? Let's look at that. And then let's look at GROY, I believe it is. Yeah, GROY. Right, gold resources. This is what I wanted to show you. Look at what's happening today. So as you can see, ticker symbol GORO was up a little bit, but look at this. Gold royalty, for those of you that's been following that, ticker symbol GROY. It's ticker symbol GROY. It was up today, 12%. Actually, it actually hit up 16% today. So it was up, ticker symbol GROY was up 16% today alone. You guys know I brought that up about a week ago as another gold play. And that's the thing that I'm not a big gold fan, but there's money to be made with precious metals, silver, gold, those type, platinum, those type of deals. And now I could have swung it today and took my 16, actually it went up 16.37%. And I started to sell some, and I says, no, I'm going to hold it. So I'm holding it, but it has cooled off down to about 12%. See here? So 11.79%, right? And so I believe that the biggest gain will be when the hard recession hit. But until then, if it gets to 15%, I'm selling it and I'm going to keep swinging it. All right. I just wanted to bring that up. There are some people that's like, gold, really? Listen, I don't care if it's cow manure. If it's making me money and it's making you guys money, I'm going to bring it to you guys. Okay. So leave me a comment on what you think about the Fed rate and what Mr. Jeremy Siegel is saying. Mr. Siegel is saying that the data is so far behind, and I agree with him, by the way, that the reading that we're getting on these CPI numbers are behind. Just like last year, when he was saying inflation was transitory, the data he was getting was behind. So he was behind on inflation going up, and now he's behind on inflation going down. So leave me a comment if you agree with Mr. Siegel. I wholeheartedly agree, and things may not be as bad as he thinks they are now, but he's going to make it bad by aggressively going up with these interest rate hikes. I personally think that he will probably go up, wind up by the end of this year at this rate. He'll probably add another 150 basis points, meaning 75 and 75. He's got to show that he's aggressive. I hope he doesn't. I hope he does. At this point, he could do 50 and maybe 25 and end it with 75, or do 75 and nothing else. I think he's too aggressive right now, and he's forcing he's going to mess up not just with the stock market, but the overall economy. Okay. That's what I wanted to talk about today. Hey, you guys know that today is Moo Moo Monday. Moo Moo Monday. Go ahead. A lot of you guys have told me you have deposited. A lot of guys said that you have downloaded, but you haven't deposited. So make sure you get those deposits in to Moo Moo. It's going to be the top link is Moo Moo Monday. It's going to be the top link, and we can continue to make these gold moves. That's why I'm doing my gold. Though I showed you, I was trying to show you one in my other portfolio. That's what we're doing by gold plays, but 99% of what we have in Moo Moo is cash, getting ready for next year, which most of us think we have a recession, a hard recession coming, because we're already in a soft recession. All right. We'll see you guys later. Make sure you click those links below and leave me a comment. Live, love, laugh, and learn.